Everybody wants to be a property developer. And the one question that I get asked all the time, how do I finance my deals? Well, today I will explain to you how you finance deals correctly. So first and foremost, we have a residential mortgage. This is where you buy a property to live in. So your deposit will usually be 10%, but there are 5% deposit schemes out there. And you will be checked for affordability. So the lender will want to know what you do with all of your incomings every single month and where you spend them as your outgoings. And they will assess you with a fine-tooth comb. Now, the reason that the residential mortgage application is so strict, it's because you're only putting a 10% deposit against an asset. So the asset is 100%. You're only putting 10% in there. So if you fail to meet your obligations, fail to meet your payments, and the bank or the lender repossess, they have to go out and sell that property for 90% of its market value in order to recoup their money. So their exposure is quite high. And residential mortgages, as we all know, are very difficult, but it's for you to live in that house. Now, when you sell a property that is a residential, you pay zero tax. Any profits you make from your residential are free from tax. A lot of people use the residential method to buy properties to sell so they don't have to pay tax. That's called fraud, ladies and gentlemen. But a lot of the country do it. So many people do it. A lot of people say, I do it to get on the property ladder. I've done it to get a head start. Technically it's fraud, but it happens all the time. Now, let's step away from residential and let's get into the business world. This is where you can call yourself a property developer. Because if you're developing residentials and you're sitting on them for 3, 4, 5 years and you're plastering one bedroom this week, doing a rewiring that side of the property next week, garden a year later, you are not a property developer. Anybody can make money when they do that. We're now into the real world of property development in a limited company. So next up you have a buy-to-let mortgage. Now a buy-to-let mortgage is exactly what it says on the tin. You buy to let. You don't buy, refurb or fall back to brick and then let. You get a couple of weeks grace period to maybe put some new carpets down, paint the property, maybe get some electric and gas certificates. But the whole point of a buy-to-let mortgage is you are buying to let. You are servicing the debt within 30 days of you taking out the buy-to-let mortgage. Now, this is a 25% deposit. You will buy this in a limited company. Some of you will still be buying in your personal name. Get some financial advice from somebody that you trust or someone that you know. My opinion, limited companies win all the time. Now, buy-to-lets are not dead. Don't let no 22-year-old on TikTok that doesn't own jack shit tell you buy-to-lets are dead. Buy-to-lets are not for cash flowing, get you out of your 9 till 5. Buy-to-lets are for capital appreciation. It's the generational wealth. It's 10 years time, if bought in the right area, they will double in value. Buy-to-lets is still one of the top strategies for any serious property developer and investor. For the stupid people on social media who talk nonsense and just click shit to get your attention and all that bollocks, they are the ones that don't know what they're talking about. Get your buy-to-lets, get as many as you can, and reap the rewards in the future, okay? Then we have bridging finance. Now, bridging finance is a short-term loan, 6, 12, 18, 24 months. You use this to buy a property with speed, usually a dilapidated property. Now, you can use it just to flip. Use a bridge to buy, sell it on, use the bridge for short-term, Bob's your uncle, made some money, off you go. Or you can use a bridging loan for a dilapidated property that you are going to improve, you are going to refurb. Then you're going to sell it or turn it into a buy-to-let. Hopefully refinance it and pull all your money out of it. That is what bridging is there for, short-term lending. It can be expensive and it can be tricky to navigate if you go over your bridging term. But communication, understanding the numbers, and having a clear plan in place will help you when it comes to bridging finance. Don't be scared of bridging. It's there to help, okay? So residential, buy to let, bridging finance. Next up, calling all property developers or future property developers, anyone that wants to get into the property world. I am in London. Come down to my blueprint where I will teach you all about buy, refurbish, refinance, rent, flipping, HMOs, auctions, deal sourcing, assisted sales, so much more. £11 a ticket. I've been in the industry for over a decade. Am I as good as I say I am? Come and find out. Assisted sales. Well, that's not a lender, or that's not money. That's a property that you have managed to do a deal on that needs improving. And then you have decided to split the money with the owner once the refurb has been done. So let me break it down in even simpler terms for you people at home. You find a property that needs developing. You negotiate with the owner to say, I will pay for the refurb, you already own the property, we will sell it at an increased rate, and we will split the profits accordingly. There's no legal fees for you with the conveyancing. There's no stamp duty. There is still a legal fee because you need to make sure your contract is watertight. But you can find a property on a Friday and you can start the refurb on a Monday. No holds barred. You can get this one going quick, but you have to refurb the property with your money or investor money. A lot of people use credit cards on this strategy. Am I a fan of it? If you're savvy with money and you know what you're doing, then potentially it could work. But if you're a fool who likes to buy shit and credit cards always get you in trouble, don't use a credit card to do an assisted sale. You can borrow money from friends, family, give them a drink on top, give them some interest. You can put out on social media that you've got this assisted sale. Does anybody want to come in and split the profits? Raising finance is not difficult. It's how you come across, how you put yourself out there. So assisted sales is a very good way of getting into the property world, but again, raise the finance. Joint ventures, another fantastic way of getting into the property world. You might not have money, but you might have deals, and you might be able to go out and find an investor that will fund the whole deal for you. You can give them 60% or 70% and you take 40 or 30. You need to build your credibility. Go on social media every single day. Post on social media every single day. Do it for 3 months and I guarantee you, someone will reach out to you with money saying, I have watched you every day, view, break down, attend events, get educated correctly, and now I'm ready to give you some money in order for you to start your journey. Those are the finances available in the property world, okay? That is how you go out and get it done. Now, no excuses. Don't comment below some shit like you can't make it happen. Post every day across all platforms of social media. It's completely free. All it takes is you getting off your arse and making it happen. 3 months, come back to me and watch how far your life has elevated. Right now, I used to be called Little Steve in the family, but I'm changing my name to Big Steve.